Hi trader, my name is Wasku Smart FX. Alright, welcome to my YouTube videos. So today I'll be talking about the weekend trade recap. And I'll be looking at the trade I took during the week. So I'll be looking at gold, of course, gold, right? So let's look at this particular video, this particular trade here. The trade I took a gold buy limit. So I'll be looking at this particular gold trade here, and I will give an explanation of why I took this trade. It's just about explaining the strategy I use for this particular trade here. Alright, so I took some buys through during the week. Yeah, I think I took some buy. I lose the sell trade. I win the two buys. Okay, and this other one here. Alright, this particular good trade here. But because of this chart here, I don't want to delete every annotations on the chart, so I will open a new chart so I can make use of a new chart. All right, so let me use forex.com. All right, so this is a new chart. So the first thing I always look for is the market order flows. I've talked about order flows very well on my YouTube channel. So I saw this part. Trend the trend is actually very bearish. The trend is bearish, and the weak candle looks is bearish. But how come I was able to spot out to trade on buys, and it look as though the weak traded buys. So the first thing I look out for is my order flows. So here I have a bearish order. You can see that we have been having a bearish order flow legs, bearish order flow. But the moment market traded into this fair value gap, I was expecting sell continuation, right? So that's what I was expecting. That's my first um analysis on gold for the last week or for this week, is that I want to sell. Now that's why I have this huge sales trade that I lost. All right, so but the thing I'm looking out for here is that yes, I can see this bearish fair value gap here. So which means that if I have a bearish fair value gap, then the expectation is that market should take out this low, right? Now if I go to 1 hour chart, on 1 hour chart, the first retracement market did to the 4 hours fair value gap, market did not come into the 1 hour fair value gap. There's also a 1 hour order flow leg. You can see a 1 hour order flow legs. So the first thing I can look out for is that the retracement market did here, market did not come into 1 hour fair value gap. This is 1 hour fair value gap here. Market only come to the 4 hours, and that's the market to chase. So when market did the retracement, I did not use the 4 hours. I was expecting markets to come to the 1 hour, and I talked about it in my on my channel. I talked about it that market is going to come back to the 1 hour fair value gap, because I was actually expecting, you can see it here, I was expecting markets to come back to the 1 hour fair value gap even before market go back there. You can see market has already chased to the 4 hours, but I was literally expecting the 1 hour fair value gap to be filled, to market to come back there instead of the 4 hours. So this fair value gap becomes my buy target. So which means that every buy I'm going to take here, I'm only targeting this 1 hour fair value gap as my target, and that is why I was able to look for a buy scenarios on lower time frame. But now this is the key. The first thing I look out for is my order flow legs. I have another flow here. You can see this order flow, this bullish order flow here. I talked about order flows on my YouTube channel. You can just go through my YouTube channel, check where I talks about the order flows, how to spot order flow legs. Order flow legs tells us everything about the market. Order flow legs tells us about the market intentions, right? So after market break this structure here, there's a fair value gap here, and I was expecting markets to okay, come into the fair value gap, which market did, right? But that is not all about the strategy. Order flow legs tells me the intention of the market, tells me where market is want to go to. But inside another flow legs, I have to look for something I call the SLP. I talked about it, I think, in my last two videos. I talked about the SLP, the structure, the liquidity, and the point of interest. All right, so inside this fair value gap, I'm not just waiting for market to retrace back to a fair value gap just for a fair value gap sake. I want to be a buyer inside the fair value gap, and that is why I will go down to my lower time frames to look for SLP inside the fair value gap, and if I can see one, I'm satisfied. All right, so the first thing I'm looking out for, don't forget the SLP. I think you have to. I'm looking at the time. SLP, the structural liquidity and the point of interest stocks. We have two types. We have the continuations and we have the reversals. The reversal is when we're having MSS, market structure shift. So which means that for me to have a reversals, there has to be what? There have to be reversal is just a change of structures. So which means that there have to be a sell, then there have to be an MSS, then reversals, then liquidity, the point of interest, then go. So this is SLP for reversals. Then when it now comes to SLP for continuation, so which means that continuation means that I'm already in bullish market, right? So when I was in a bullish market, okay, let me draw it. Let me explain it very well. I just want to do a very crash explanation, very fast one. Let's say, for example, we have this OI, then market is in a bullish trend. So the moment market break this all-time high here, or this high, this an old high, the moment market breaks it, even there's a trend of bullish, the moment market breaks it with a body candle, it shows that what now we want to continue the movement. So I'll wait for a liquidity, then I will wait for point of entry. So this is the continuation. So there has to be a break of market structures, right? A break of market structure from an old high. The market is going to break the old high and the new high. Then it shows the market will want to continue the trend. So that is SLP for continuation. I show you SLP for reversal. So like I explained it on my YouTube channel, just go and look back there. And if there's a need for me to explain again, I'll come back to explain, to make a video on it just alone, but just for you to understand what a continuation and reversal is all about. So the first thing I look for is trend. I look for my order flows. When I look, order flow tells me the bias of the market. Order flow tells me the market intentions. Order flow tells me what is market doing at that current market price or at that current market conditions, right? All right, so you can see that I saw this fair value gap, order flow legs. This is the low. This is the low of the order flow legs, and this is the high. So inside this fair value gap, I want to look for SLP. So I can see an SLP, right, like on 15-minute chart, but because it is not very clear, let me go to 5 minutes so that for you to see it, I can see it on 15 minutes, and I'll show you after when I'm done with this. All right, so on 5 minutes chart here, you can see that I have this bullish trend. Market break this market. Okay, let me start from the bearish first, because you can see we have many bearish. So we have bearish, like market as in a bearish trend. So here I can see market having a bearish trend here. Sorry. So I have a bearish trend. You can see market is breaking all lows and market is securing all highs. You can see all highs is not being touched by the market. So which means that I can categorically say that I'm having what, a bearish trend. So the moment market give me an MSX, MSX means market structure shift with a body. The first one market did here is with a wick. So I am not counting it. I'm ignoring it as if it does not happen. So I will wait for the body. The moment you have a body to be the body breaking this high, it tells me that now market has shifted the structure. So after the body, then the first retracement. So this is a candle inducement. I've talked about, there are many things I have to talk about. So this is a candle inducement. The first pullback is a candle inducement. There's a structural inducement and there's a candle inducement, but this particular one is a candle inducement. After the market break the structure, this next candle here, it traces back, and by this is an inducement. So now we have an MSS. So where is my POI? My POI here, I have what? I have this breaker block. So I have this breaker block, and I can also make use of this guy here too, because you can see that the liquidity here has not touched it, right? So I can also make use of this also, right? All right, so you can see this other breaker block here too. We have a breaker block here too, which the liquidity does not invalidate. You can see that is just a little bit. So at this particular level, I can if I don't want to miss the trade, I can put my entry here, and this is where I put my entry. That's where I put my entry. I don't want to miss the trade because I don't know if market is going to come back to the first one, but market should come back because that is the first breaker block and that is the real breaker block. But I put my entry here because I have a breaker block here too. I can say, okay, oh, I have a DBOS here. I have a what you call double break of structure here. 1 and 2. So you can see I have a breakup and double. So which means that the both continuations and um, reversals are all in this structure. So I can see it here. So, but this should be the best expectation of where market should come to. All right, but this is where I put my entry and I put my stop loss below this block here. All right. So you can see where market comes. This is where I put my entry. This is where market, you can see how the market enter into the first breaker block. That should be where I'm supposed to put my entry, but because I don't want to miss out the trade, that's why I put my entry at this first breaker block here. All right, so and I target this eye. All right, let me put 15 minutes back. Okay, on 15 minutes, where did I target on 15 minutes? All right, so on 15-minute chart, I was looking at this. I think there was a line I was looking at. Alright, so on 15-minute, I just put my liquidity around this 4.5 RR. So that's where I put my TP 4.5 RR. Let me show you on. Alright, so this is it. It was on this eye. I was putting my TP on the eye. So it's supposed to be on this eye. Okay, so just once market retrace back there and give me it. Okay, this was the second one. All right, so you can see where I put my entry. You can see where I put my entry. The second breaker block. I was using the second breaker block, so if I should use the first one, I use the second breaker block, and that is where I put my entry. And when market to trace back there, you can see market to tracing back there to this level here. So, and this is where I put my TP. That's 500 pips, 500 pips and 4.2. So that is where I put my TP, and that is the way I took the trade. You can see the way I took the trade. Let me go back to the white chart. All right, so you can see the way I took the trade. I took this one also. All right, but this is the one I was explaining. You can see the way I took the trade. I make use of DBOS. That is the continuation. But there's also a reversal there. So that's why we have to study the chart also. And also there's the same thing I use here to DBOS. You can see this all-time high. You can see this overall high here, right? You can see this overall high. And so you can see this is the high here. So when market came back there, let me use 15 minutes. It was seen on 15 minutes. All right, so you can see this high here and an old high and a new high for the bullish trend. So when market get the market break it with one candle, it shows the impulsiveness of market at a particular time. It shows the continuation that market is not going to take out liquidity on that high. Market wants to break it for more greater position, right? For more greater position. So the first candle retracement is my liquidity inducement, and that is the candle inducement, right? One candle inducement. So when I make use of the breaker block here. So you can see how market comes back there, and it's not like I don't like I just mark it out maybe after market has moved or something like that. I actually dropped it even though it was at the end, like the closing of the market time. So I don't want to give in a trade at that particular time. I don't want to give a trade because market is going to close very soon, and there can be a lot of spread and everything. And if market opens on Monday, market can open in a way that it can go against the direction. So that's why I did not give it as a trade. I only give it as an outlook. Oh, this is what I was looking at. I want to take a trade here, my new trade or something like that. So, but that's it. So that's just how the week goes. I'm supposed to explain why I took this buy here too. This buy here is very, very clear. Let me show you so that you see that it's very, very clear too. There's a buy I do not take and it pains me very well. So you can see this particular buy here. It's kind of very good, always moves in a way that it's kind of unique, but it's in a very, very they are not too stable to think, to look at market structures and everything. You are not going to see it. You can see this particular level here. We have kind of very strange market break the low, breaks the low, and break this low. Also, we have this low being broken. Also, the market break this high, giving me an MSS, a reversal, right? And MSS, you can see now we have multiple candles retracement. So as an inducement. So when market give me an inducement, I make use of this other block. But you can see you have multiple lows being rejected at that. So that's why I put my inducement this way. The market comes into it and you can see it. I gave it also out. Alright, so that's you can see it here too. You can see this low being taken out, MSS, inducement, other block, then market wiped out. So like that's just how my week goes actually. And I'm also learning. I'm also studying the chart. So for the next week, yeah, for the next week, I'm hopeful and positive, and also yeah, I'm just to focus because I've studied a lot of the mistake I did during this week, because there's a trade I did not take. Let me show you the trade I did not take this week, and it really pains me because it's a very, very clear trade too. This particular trade here, you can see we have bullish trend. It can be seen on 15 minutes very well, but let me show you 15 minutes. So on this 15 minutes, you can see we are having bullish trend. Market is trending bullish. So market, this old high and this new high, market breaks it with a candle, then retrace, then give me another block. That's all. A lot of people take this buy and it's a very good buy. Alright, so that's everything. Don't forget to like, share, and subscribe. I'm gonna do a video on BTC. I have a BTC position. I was looking at this particular level, but unfortunately, I cannot take it because my pro frame I'm using does not trade during the weekend. So I'm going to wait till funding piece does not trade during the weekend. So I'll wait till Monday for me to take this trade. But this is a very, very good buy trade on BTC, and I'll be looking out for it because it's a very, very fantastic one. Very, very, very fantastic one. So let's see how it goes. Let's see how it goes. All right. Thank you. Don't forget to like, share, and subscribe. Thank you.